Right now, it's apparent the economy is in transition where the good news is competing with the bad news. And while some economists expect 2 more rate cuts, the Reserve Bank seems comfortable. And if you believe them, there will be no more cuts this year, ever. Dr. Frank Gelber is Chief Economist and Director of Economics and Property at BIS Shrapnel, and his views on the economy and the outlook for house prices, I think, could be critical to understanding whether the good news will actually beat the bad news or vice versa. Mate, great to see you.
Evening, Peter.
Did you hear me on the intro saying one of the oldest and most respected economists in the country?
Yeah, I thank you for that. Next you'll ask me to do my hair, but I can't find any of it.
Well, look, I always say in our business, economics and market commentary, it's people with grey hair or no hair that count, as long as they've got their marbles left.
Hopefully.
Okay, great to see you anyway, mate. Before we get into the property, I always love your view on the economy. What do you think is going on in the Aussie economy?
Well, then I've read some of your pieces and you're getting a little bit optimistic on it.
No, I thought you might say that. Yeah.
And I think it might be a little premature.
Okay.
I think there are some difficult hurdles that we have to get across before we see a real strengthening in the economy beyond, say, 3%.
Yep.
So I think we've got another 2 weak years ahead of us.
2 weak years?
2 weak years.
Below 3%, you think?
Below 3%.
Gee.
Yeah, absolutely.
Yeah.
And the problem is, you know, the first thing is the dollar's too high.
Yep, I agree with that.
We're still losing industry, and this is not just the motor vehicle industry. This is the last in a long series of industrial losses we've been seeing for the last decade.
Yep.
And so that continues while ever the dollar remains too high, and 90 cents is too high.
So what are we going to do? Does the Reserve Bank have to turn on a dime and start cutting rates again, Frank?
Well, I don't think so. So the residential recovery is already well entrenched in the areas where it's going
That's
to be.
good for the economy, isn't it?
The economy, we've spoken about that before it happened.
Yeah.
So now it's come through, that's terrific. And Resi is always the first out of the downturn.
Yeah.
Right? But there's not much they can do to stimulate non-mining business investment, which is necessary for the next stage. And so we're bumping around the bottom of the cycle in terms of investment in everything but mining. And of course, mining is on the threshold of a protracted but orderly downturn. And so, you know, will non-mining business investment come through quickly? No. There's still plenty of capacity out there before people need to invest, so we're still well and truly entrenched in cost-cutting mode. That's where we're getting, finally, the profit increases coming through.
Okay, so I get your argument. You started off with the dollar, and you're saying this non-mining investment is not likely to come through because there's capacity there, and the dollar is making it a lot harder for them to get to full capacity?
Yeah. The two problems are related. So if the dollar came down really quickly and stimulated the trade-exposed industries, so export industries, import competing industries, not just manufacturing, but tourism, education, services, business services, then we would see a lot more stimulus spreading through the economy and would bring forward investment.
Yeah.
But my fear is the dollar stays too high for too long, that we probably never will come down to the level that we need to come down to, which I think is still 70 to 75 cents, before we see on average competitive domestic industry.
Yeah.
So while ever we stay too high, it impedes the recovery in trade exposed and stops the rest, you see.
Okay, so we're seeing more and more better stories coming from Europe, even though it's a long way off looking good, but it's compared to how bad it was, we're at least...
I wouldn't trade places with Europe.
No. But what I'm trying to do is, see, you're arguing the case that we're pretty well going to be around the 90s, maybe high 80s, for a long time. You're not seeing an 80 US cent Aussie dollar like some economists and foreign exchange traders say. You're not seeing that, hey?
We are seeing it, but we think it'll take years to get there, and we don't think it'll be enough.
So is it going to go down then because the greenback goes up, and therefore you're not thinking the greenback's going to go up fast enough to drive ours down?
Well, a little bit of that, but really what we need to get the dollar down quickly enough is falling interest rates won't really do it, and the Reserve Bank, I don't think, will intervene in the foreign exchange markets like that. We need a crisis of confidence overseas in Australia. So if they panic about us and the dollar falls, hey, that's the best thing that could happen to us.
Yeah, well, why doesn't Joe just go for a highly irresponsible Labor-style budget then?
Well, they might be doing a highly irresponsible Liberal-style budget, all of their own.
Well, but on this point, I wanted to drag you into this. You're not trying to suggest that you want Joe to go for a horror budget first up.
No.
The economy is so weak. I'd like to see them be a little bit stimulatory and maybe go horror in 2015 if the economy is strong in 2015.
So cut slowly. We didn't get here in a year, and we don't have to fix it in a year.
Correct.
And make sure we don't impact on productivity-enhancing infrastructure investment, both hard and soft.
Yeah.
And of course, that's what's happening now. Roads expenditure, all government items of infrastructure spending are falling, not rising, and quite dramatically. They've already started to fall, and they've got another 2 years before they stabilise and then hopefully start to pick up, unless there's a big change in policy.
Frank, are they falling because treasurers are saying, oh, I better be responsible and get my budget deficit down? Is that why infrastructure spending is being pulled back?
Well, I think they're looking at it slightly differently. They said we did a lot of infrastructure projects to boost the economy post-GFC, and now as they're completed we're not going to replace them, and that will start to bring the budget under control. But we've
got enough school halls to do us for probably about 2 generations, I guess.
Yes, but there's plenty of other infrastructure that we really need to make Australia more competitive.
So would it be in Joe's best interest then to be courageous and actually surprise us with the announcement of more infrastructure projects than you would have politically expected from a new government?
Well, they're talking about infrastructure, but my real problem is I don't think they'll do it yet. I think it'll take time to bring the next round of projects on stream, and in the interim, we've got falling government investment actually putting a ceiling on the economy.
All right, so is there any good news in your scenario for the Aussie economy? You guys weak for 2 years. What does weak mean actually in numbers? 2.7?
Yeah, sub 3%.
Sub 3%.
You know, and it's not going to collapse. There's no danger that we're going to have a recession.
It's just going to be an okay economy, but not a great economy.
The reason is that we've got strong growth in mining, gross product and exports, adding about 1% per annum over the next 5 years to growth, putting a floor under growth. The recovery in residential will help, but it needs to broaden beyond mining and into the rest of the economy. We need to go through a transition, a structural change, back towards the sort of balanced growth that we had before the mining boom hit, and we dropped everything and shifted towards servicing high levels of mining.
So a 15% fall in the Aussie dollar is not enough?
No.
What's it have to be?
70 to 75, you know, and some people say lower.
Yeah. If the Reserve Bank just went for a 0.5% cut in interest rates, the dollar would drop to probably 83, 84, wouldn't it? It shocked the market.
Maybe, but I don't think they'll go that route.
Why not? If your growth scenario is right, they should. But they must think we're going to grow a bit faster than you. Do you think that?
Well, I think they'd be a bit cautious. I think they probably think they've done all the mileage they're going to get in terms of stimulating the economy directly. They do know the dollar is too high and would like to see it lower, but whether they actually intervene in that market is a totally different issue, and I doubt that they will. I might be wrong, but I doubt that they will. And I'm in the school of thought that says that interest rates stay around about current levels for another 12 to 18 months, and that the next shift is upwards as we start to see other parts of the economy strengthening.
Yeah. So when I use that analogy, for example, in Australia, I see a snowball of confidence building. Your snowball is smaller than mine.
That's right, and comes through later. But I'm actually reasonably optimistic in the medium term, because with a lower dollar, hopefully, you know, that will happen, and it is largely out of control. But we will see a rebuilding of non-mining industry, which will balance out the economy again. It's not a huge task. It's impossible to do while the dollar's too high and there's excess capacity in the system. Okay,
housing bubble. When you open up the Fin Review on Saturday and you see another story about housing bubble, what does an expert like you, economist and a housing expert, what do you say?
Well, we haven't got a bubble. I mean, so Sydney house prices, which are the biggest culprits in this, have been flat for a decade.
Yeah.
You know, they're lower in real terms than they were at the beginning of last decade. So what's this bubble we're talking about? You mean every time we see a little bit of an increase in prices, that it's a bubble? No, bubble is when speculative activity becomes self-fulfilling because weight of money drives up the market and it gets beyond reality. That's nothing like what's happening now.
Yeah.
We need to build more. We needed prices to rise a little to spark the building activity. Those things are happening, but this market is undersupplied, not oversupplied.
Yeah.
This is not a bubble.
Okay, Frank, so what is needed to, more importantly, and people have asked me this question, like how many years of double-digit growth have we had in the past and we still didn't call it a bubble? Have we had 4 years where the market's grown up by more than 10% and we didn't call it a bubble?
We've seen phases of the residential cycle where over a few years prices doubled, median prices doubled. On several occasions in Australia, not always at the same time, but here in Sydney I remember 2 of those episodes. Now, was it a bubble? Well, probably. And did it bust? Yes, it did. And so we saw falls in housing construction and falls in real terms in housing prices, sometimes masked by inflation. But we're not going to see a Harry Dent collapse in the market. That's crazy stuff. I mean, he says, you know, prices are too high in relation to incomes, therefore prices will fall. Well, that's not how the market works. And actually, there's an underpinning of this market because now prices are just around about replacement cost, and it's hard to make the numbers stack up on new construction at current price levels.
Right.
So the only way to get prices down in real terms over the long term is to put plenty of reasonably priced residential sites into the market, keep supply up so that people can produce houses more cheaply.
Is it correct that an average house has about 30% of tax in that house, Frank? I've heard that figure so many times, I've never tested it out.
So I don't know exactly the number, but it's true that there is a very significant underpinning of housing prices by infrastructure charges in particular and other taxes, which basically means that to get a residential site nowadays, you're starting off at around about $150,000.
It's interesting you brought up Harry Dent's name. I've been critical of Harry's. Look, he's a long-range forecaster. He tipped that the 2008 GFC 10 years before it happened. But as an economics forecaster, when you tip 10 years before, you've been wrong for about 9 years, haven't you, Frank?
Well, it depends whether you're tipping it to happen every single year. So if it, look, you have to judge each argument on its merits. And so,
but a housing crisis, like a devastation, he's kind of describing like a subprime problem that we saw in America, which then led to a GFC.
The argument goes, it happened in America, so it has to happen everywhere else too. I mean, it's not true.
Okay. And also, I know for a fact that some American economists from an august body came over here to study the potential housing bubble here, and they thought we had non-recourse loans here. I think these hotshot economists thought Australia was just like America, like a lot of Americans do think.
Well, of course. So their housing is tax deductible, they can walk away and hand in the keys. It's a totally different market.
Okay. What about the commercial side? Are we seeing some improvement in the building and supply of that kind of product?
Well, it's long and slow, and the reason is that demand remains really weak for most commercial activities.
Why?
Because the economy's weak.
Okay.
And because now a lot of the impact of the weakness in the economy is actually hitting the services sector, our growth sector for 20 years, right, was much weaker last year than the rest of the economy, which wasn't so hot anyway. And so demand for things like commercial property, office space was really weak. And so we built not a great deal, but a certain amount, and vacancy rates went up because basically we built more than we needed. Right? And if demand remains weak for another few years, then it will impede the recovery in construction. We're seeing a bit of construction, but not a lot of construction. But having said that, there are strong markets and weak markets. So in Brisbane and Perth, we're building at boom time levels. Projects committed will be coming on stream over the next 2-3 years. And demand is weak, so they'll be wildly oversupplied.
Yep.
And they're in a long period decline.
That's commercial.
That's commercial in Brisbane and Perth.
Yep.
Whereas, you know, in Sydney and Melbourne, not building nearly as much. Demand is weak, but, you know, as demand picks up, we'll need to be building again, and so they're in a long period under supply and picking up. So it's very different market by market.
All right, mate. Great talking to you as always.
Thanks, Peter.
Thanks, Frank. Coming up after the break, we'll talk super with Alex Dunham.